one that is, making the news this afternoon. Dr. Reddy slumps in trade after its fourth quarter numbers. Street doesn't like the margin, the contraction sequentially. In our special Insight Edge segment, Ekta talks about what the management said to us and what you made of that, Ekta.
Well, yes, I'm going to focus on what were the key disappointments and the reason why the stock is lower by around 3.5%. Now, the key reason why that took place is because the margins disappointed, 26.4% versus 25.9% year-on-year, but versus expectations of as much as 28%. The company said that they incurred an R&D expense, which was higher this quarter. It was impacted by higher expenses this time round. And going forward, their guidance of around 25% EBITDA still sustains, and that will give them flexibility for future investments as well. So that's what the management said. Now, the other key disappointment was the US sales, $391 million versus estimates of $350 to around $412 million. Yes, there were lower end estimates, but more of the street was expecting $400 million plus for Dr. Reddy's this quarter. This $391 million is a sequential decline for them. They've done lower sales in the US than they did in the previous quarter. Now, the street is wondering it's possibly because Revlimid generic sold lower amounts. So there are some estimates that they sold $60 million as compared to over $100 million in the previous quarter, but the base business probably held up for them. Now, Dr. Reddy's has said that they remain consistent in the US like previous quarters. Base business saw more market share in key products. It's been a meaningful quarter for them when it came to Revlimid generic. They're expecting key drugs to continue being meaningful in FY25 in the US, and they're aiming to launch 20+ products in the US and going forward as well. So they're quite bullish on the US. Let's see whether this $390 million mark also sustains for them. Now, overall guidance by the company is that they aim to grow the domestic business by around 10%. This is X of the Nestle JV deal. The rest of the world market should probably grow in double digits for them. They've also received a voluntary action indicated status for their Bachupalli formulation facility. Now, brokerages are a bit sanguine. CLSA underperformed, target price 6,080 rupees. They believe there's a subdued midterm outlook. Jefferies has an underperform with a target price of around 5,010 rupees. And Nomura is neutral with a target price of 6,499. In fact, we did speak to Mr. Erez Israeli. Let's listen in to what he had to say.
This is just a timing of orders and supply. The US stay consistent like in the quarters before, or with all the levers, meaning the base business with more market share, new products, and lenalidomide. So we see that as a consistent quarter also in the US. In general, this quarter we had more expenses on R&D. Some of it is what you call seasonality. We have quite a few submissions in the end of the quarter. In addition to that, we are involved in several business development, and we have certain expenses behind them, plus a licensing fee of some products. So overall, this was impacted our expenses primarily. We believe that the 25% EBITDA give us a great sweet spot between how much we want to invest for the future.
All right. Before we slip into a short break,